We have with us Chairman and Managing Director Mr. M.K. Surana, HPCL. Thank you for talking to BloombergQuint, sir.
Thank you.
Sir, could you share us the results of the earnings?
Yeah, so in quarter one of 2017-18, HPCL has posted a net profit of 925 crores with a sales turnover of 59,000 crore, 59,891 crore. Refineries has posted a GRM of 5.56 crores after accounting for the inventory losses. If we remove the inventory losses, then the core GRM was $8.81 per barrel. Refinery processed around 4.49 million metric ton, which was slightly higher than the last year same quarter. Marketing had recorded a sales of 9.2 million metric ton, which was one of the highest sales in any quarter previously. We had a growth of 3.5% against the industry growth of 3.4%, and among the PSUs, we did gained a market share of around 0.2%. This in MS we have recorded a growth of around 9%, and in LPG 10%, aviation around 25%.
Sir, what was the inventory loss in Q1 FY18? Please tell in dollars per barrel.
So dollars per barrel, it will be 8.81 minus 5.56. So that will be it will be around 3.2 or something.
You had a GRM of
So that is
5.86.
on the refinery side. And in the marketing side also we had a loss of around 960 crores. So if it account the full thing in the rupee terms, so it will come to around 1,595 crores for this quarter, compared to 1,935 crore gain in the Q1 of 2016-17. So it is a double. This quarter is a loss. Last time it was a gain.
You had a GRM of $5.86 per barrel in Q1 FY17, which was down because of inventory losses. What is your outlook for the rest of the financial year?
Actually, in the quarter one, there was a drop in the crude prices. Compared to earlier, there was a gain. Actually, last year there was a gain. Last year that quarter was a gain of around $10.56, and this quarter is a loss of around $4.56. The drop in the crude prices. So that has led to the inventory losses. Now again the crude prices have firmed up, so it is again touched around 51, 52. So it should help in having at least not having any inventory losses. It may add to inventory gains. The cracks are good right now in the diesel and MS, also because of one of the refinery in the Europe shutdown. So that has also led to the better cracks on gas oil basically. And that is the reason that in spite of the substantial inventory losses, the product cracks were good, and that is why the margins are healthy. So in a long-term basis, I do expect a GRM on the yearly basis of $5.5 to $6 definitely.
How has been the upgrade of petrol and diesel to BS6 for the refinery? What is your outlook?
So BS4 was rolled out on 1st of April 2017 smoothly across the country. Both of our refineries had been supplying BS4 fuels from that time. Now BS6 is supposed to be rolled out on 1st of April 2020. Both of our refineries have taken up the projects for that. In our case, those projects are also along with the refinery expansions and bottom upgradation projects. And we are on track for both the projects at Vizag and Mumbai. The process licensors have been finalized. The basic engineering design package has been finalized. Some of the equipment have been ordered. We have floated the tender for EPC contracts. So we are on track for those projects. So we should be able to roll it out by 1st April 2020, BS6.
What are your capex plans for this financial year?
So this financial year we have got a capex around 7,100 crore, both for refinery and marketing put together. Yeah.
And the government has announced ONGC buying out HPCL. What are the benefits that HPCL will get from this merger?
Actually, ONGC and HPCL to that extent are focused on the different streams. ONGC is focused on upstream, and HPCL is focused on the downstream side of things. As far as HPCL is concerned, MRPL coming to HPCL brings one synergy to us, because MRPL is standalone refinery and we have got a shortage of the refinery capacity. We sell more than what we produce, and MRPL doesn't have a marketing setup. So that is one area of synergy which is possible between HPCL and ONGC. Otherwise, ONGC and HPCL to some extent are differently focused on as far as the business lines are concerned.
Do you expect the deal to be complete by this financial year, FY18?
That's what the minister has said. Honorable Minister has mentioned in one of the interactions in the media. So I assume that that will happen like that. Government is already working on it because there is already an advertisement for appointing the valuation advisor, transaction advisor, legal advisor. So there is a process has already been set into motion of that.
So if this deal happens, which will happen, though the ultimate ownership will be in the government's hand, but now ONGC will be technically running the company. So there is a change of ownership. So still why there is no open offer for HPCL?
So there is a difference between the ownership and the management of the company, professional management of the company. So right now government is the owning 51.11% share of the company, which gets transferred to ONGC if this deal goes through. As far as the management of the company is there, that is a professionally managed. So like any listed company, and as per the statement which has been made by Honorable Minister in the Lok Sabha, the HPCL will continue to be a listed CPSE and its brand identity and unique culture will be maintained. So I do not expect very major changes in the management of the company as such.
So one of the motive behind this acquisition was that ONGC could tap in the cash balance of HPCL. Keeping that in mind, how do HPCL minority shareholders tend to benefit from this deal?
I am not in knowledge of any such thing that one of the objective of this was this. So it will be incorrect and inappropriate for me to comment anything on this. As far as HPCL is concerned, we have got our growth plan and we will expect it to be continued. And we do not have any indication as of today to suggest that HPCL's whatever the plans are there for future growth and the projects which are already in, there is any dilution of any of those. Both HPCL and ONGC has got their own balance sheet and own strengths, and I am sure that they can continue to do their own projects irrespective of dipping into each other. And together we will try to bring value to the shareholders of each company and as a group.
How do you see the movement of crude oil prices?
So crude oil prices, if you would have seen that in this in July month, it has slightly firmed up now. It has gone to 51, 52 or so. But I am not sure that whether this is a trend to continuously go up. We still do not see that the prices will be crossing over 55 or $56. And the compliance level on the OPEC cuts is also at slightly lesser than what it was there initially. So it is around 80%. Then some of the OPEC countries like Libya and Nigeria, so they were not having any curbs on that. So we need to see that, and at the same time, US shale production has increased. They had continuously been able to bring down their break-even costs. So I think that the crude will hover less than 55 going forward.
Singapore GRMs have moved up significantly. Will this sustain?
Because of the better cracks, as I mentioned, the MS and HSD cracks are better because of one of the European refinery having shut down. And but when that refinery comes back, and in general, the second quarter cracks are normally better because some of the driving season starts in America and all after that. So for some time it should be firm, and then later on we'll see that how it goes forward. But right now the diesel cracks are good, naphtha cracks are also good.
Last question, the government's plan to end the subsidy on kerosene, how will it impact the oil companies?
Right now the kerosene as a quantity is not substantial, and there is a definite move to replace kerosene with LPG. In fact, some of the Union territories like Chandigarh and Delhi has been declared as a kerosene-free states. As such, it does not affect the bottom lines of the company, except that it subsidies do put some stress on the working capital on the companies. And when the subsidies amount used to be substantially high, it used to make the companies do a lot of short-term borrowings, which definitely used to put stress in terms of interest costs, in terms of the borrowing capacity, in terms of the rate at which you can borrow, in terms of your creditworthiness. So not having the subsidies helps in improving the working capital. Otherwise, it does not directly, as to the extent it is compensated, you do not have the direct impact on the bottom line of that, apart from the interest cost.
All right. Thank you for talking to BloombergQuint. Thanks.